Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of Plug Power, ticker symbol PLUG. And so last week was pretty exciting. We had earnings on Friday, and I had put out a video on Plug on February 29th, so just before earnings. And it does look like we had a pretty green day following that. However, we did start much lower, being down pretty low relative to the previous day's open. Let's see, let's get a measurement of that. Or sorry, from previous day's close. So coming down from there, it's about a 10% drop, but then being up about 10% following the close of that day on March 1st. So being quite a surprising day, and price has continued to go up. As I do record this on Thursday, March 7th, during market hours, current price is just below $4 a share, and I do think it is quite possible we could be putting in some topping signals right around $4, so I think it's good to keep that in mind. And I do think that there might be a retracement coming up that we could potentially be pulling back before either consolidating to then move higher, or perhaps just retracing before we find our footing and then reevaluate then. And so what I see here on the chart, really just based on the Fibonacci levels that I went over in last week's video, and it does look like we have been rejected from, like I said, right around $4 here with this 382 level from the yellow retracement at a price of $4.04. Did get 2 wicks above that level. Current price is trading below it. And so the wick high of yesterday, March 6th, was a price of $4.10. We have gone past that today so far on the 7th, hitting a high of $4.16, but again, getting rejected from $4 a share, $4.04 a share. And it's quite possible it could be closing below the 50% retracement from this downtrending retracement here. That is at a price of $3.98.5. So being just about 2 pennies below that currently. I do think it is suggesting weakness, namely that we are seeing these 2 wicks coming up, not being able to put in a higher close or putting in a close at a higher high. So yesterday's high of $4.10, if we want to see a continuation to the upside, we really need to see today closing at a price of $4.10 or higher. If we don't get that, there's always tomorrow and Monday. But what we want to see are 2 consecutive closes above these wick highs. And so now that today's high is above $4.10, we now need to be seeing a close, 2 consecutive closes above $4.16 to suggest continuation to the upside, like getting to the 618 level here, marked at $4.25.8, this white line here. So that is the next level to the upside, although I do think we might be met with some resistance there because we do have this consolidation over here, this sideways consolidation before this downtrend continued down. And so we see that reflected in this volume shelf here. It does look like the 2 wicks that we've gotten up have been rejected from that. There is a lot of resistance here, so I do think we might be pulling back to these levels to the downside, like the 382 at a price of $3.71.2, which does coincide pretty nicely with the 50% retracement here from the yellow retracement at a price of $3.70.1. So right around 370 to 372, maybe we will find our footing there. But it does look like, we had gotten rejected from the 50% retracement here on March 4th when we did hit a high of $4.02. Again, $4 being a tough level for us to get above. We did see a pullback closing below the 382 on, let's see, that was Tuesday. And so we are kind of, testing these levels, bouncing around them. And I could see the 382 breaking down, price potentially going back to the 236, right around a price of $3.37.5. If that were to be the case, I do think that could be a really nice dip buying opportunity, or perhaps a level to be reevaluating at if we do break below the 382. So I would look for, closes, ideally closing at or above $4.05. So that would be, above this 382 retracement. But really, actually, I should say not ideally there. Ideally, we need to see two closes above $4.16. So that is what you should be looking for a continuation to the upside. If we do see wicks up there, though, that could be a good opportunity to trim before seeing a pullback, before possibly settling around $3.70. So do keep an eye out for that. But yeah, I do think with these two wicks up here, I do think that we have, had a very nice run from the bottom here at $2.83, but also, there is this tiny gap to the downside at $2.68. We have not yet filled that, so it is quite possible this rally that we've seen could be faced with, a little bit of a retracement. And if we are to assume that $4.16 is the high, we can do a retracement to get an idea of where it could be going to the downside. So I'm just going to do a retracement from here, the low at $2.83, going up to the high here at $4.16. Just going to adjust that here. All right, and so with those levels adjusted, we could see where price could be going down to if it does break below, eventually, break below $2.83. With the 1618 extension from that, and that is at a price of right around $2. That's really like a 50% reduction in price from current price. So I do think that does seem a little extreme. First, we do have to cross the gap off the list, which is at $2.68. But first, I think, we will probably consolidate on the way down if that is the case. But it is quite possible we could consolidate a little bit before moving higher. So I do think all those levels that I went over are good ones to be paying attention to. But I do think it is good to be exercising some caution currently because we have been putting in some topping signals and we are at the key psychological level of $4 a share. So, I do think that we will be seeing a pullback, whether it is short-lived or long-term coming down here. I do think, like I said, good time to be cautious. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.